Hi, everyone. I am Shakira. That's the Love and Money Show. Hope you are well. So, today we're going to talk about the stock market, how to get rich during the 2023 market crash, and why the rich do not fear market crashes. First, I'm going to give you an overview of what is currently going on in the stock market. So, you know that the feds are increasing the interest rates, and this has an effect on the stock market. When the interest rates are increased, it causes the stocks to go down. That is what is happening. So, if they keep increasing these rates, the stocks are going to keep going down. So, generally, what is happening in the stock market, we're in the bear market, as you know, where the stocks are going down. And it's going to be hard for the tech stocks right now to perform well. So the economists, they have been reviewing the markets and what is going on in the markets. And according to the economists, they are bracing for a sluggish economic growth. So they aren't expecting much. These are the economists, the people who study the markets on a regular basis. They aren't expecting much, like I said before. They're expecting sluggish economic growth. So, the whole picture, the NASDAQ has tanked by 33% in 2022. Snap down 80%. Tesla down 65%. Apple down 27%. So the tech stocks, they are expected to continue to underperform until the feds stop increasing these interest rates. As you know, they keep increasing the interest rates, the stocks keep going down. So there is a correlation there between what the Feds decide to do and how the stock market is affected. So, why the rich do not fear the recession, why they don't fear the market crash, and how to get rich during in the market crash of 2023. Well, the rich see this as everything is on sale. So there's no fear here with the rich. When the stock are down, stock market is down, it's on sale. So instead of buying this stock for $20, for example, this stock is down to $5. So I can get this same stock at $5 instead of the $20. So that's how the rich see the stock market. It is down and it's on sale. In fact, the whole market is on sale. So we're getting ready to have a shopping spree. And that is the way that the rich look at the stock market. So, in fact, some are actually looking forward to this because they're buying stocks at a cheaper price. They also know that the stock market is going to go back up. So, you're buying it on sale and then it is going to go back up. So, this is the reason why the rich do not fear stock markets, and some actually look forward to the stock market crashes. So, you don't have to be wealthy to be an investor in the stock market. You can buy stocks for very low prices. In fact, they are on sale, like I just mentioned before. So, this is not something that you have to be wealthy to do. However, it is a way that you become wealthy. The stock market is one of the greatest wealth generating tools that there is. So, generally, people are poor and broke because they are not investing in assets. So, the difference between the rich and the poor is that the rich invest in assets and the poor do not invest in assets. So, by being in the stock market, this is one example of an asset. And you don't have to be wealthy to invest in the stock market. You get started right now, actually. So, this is what is going on in the stock market. This is the ideal time to get in. Like I said before, Everything is on sale, so you are buying at a reduced price. Generally, what is done is dollar cost averaging. That means that you're putting in money in whether the stock market is up, whether the stock market is down, dollar cost averaging. Stock market is down, you're putting money in. The stock market is up. This is dollar cost averaging. You just have this consistent putting in of money, dollar cost averaging. So that is generally what is recommended when it comes to investing. Also, index funds are recommended over single stocks. What happens with index funds is that index funds is a whole bunch of group of different funds, depending on which one you decide to get into. So what they do is they kick the one that is not performing, they kick it out, and they find another one that is performing and put it in. So that it allows a barrier of protection when you're in a fund, as opposed to being in a single stock and depending on one company to perform. If you put your money in a single stock, if it performs, there is a chance that your bank account would shoot up, right? If it performs well. However, there's this risk with single stocks. If the company were to go bankrupt or anything like that, then you would lose all your money. That's why the index fund is safer, and the single stock is riskier. However, there are people who have seen their money shoot up because they took that risk. There are some people who have seen have lost money because they took that risk in a single stock. So when it comes to single stocks, only put in money that you are willing to lose, because you don't know if this company is going to be successful or if the company is going to go bankrupt. Now, one example we saw is with Tesla, what is currently going on with Tesla. As I mentioned before, Tesla is 65% down, and a lot of people had their big hopes for Tesla because is the electric vehicle company, and we are moving towards electric vehicle. Like everything is moving towards the electric vehicle. But with everything going on with Elon Musk and Tesla, it hasn't been performing well. So if you were to put all of your money into that single stock, then you would have lost some of that money. However, we are moving towards the electric vehicle pattern. So investing in things that such as the lithium battery or the chargers are some areas to invest in, because you know that we are moving in this direction of electric vehicles. Keep in mind, I'm not a financial advisor. This is not financial advice. It's just for educational and informational purposes only. But these are some of the reasons why the rich do not fear market crashes. They know that the stock market is down right now, but they also know that it's going to go back up. The other thing is that people generally do not put all of their eggs in one basket. They're not putting all their money in the stock market in the hopes that it will go up. People have investments in other areas: real estate over here, business over here, side hustle over here. So generally, people are not depending on just one thing. So that creates a safety net also, diversification. And so just depending on the stock market to make you wealthy, yes, the stock market will make you wealthy, but there is this up and down with the stock market. And a lot of people don't like that, not having control, because as you can see, the Fed is controlling the stock market. So you're going to need more than just the stock market when it comes to having safety and security. Um, Things like buying real estate, Real estate is real. It's a real asset, something you can have more control with as opposed to the stock market. And then creating your own business or side hustles is important also, just to bring that diversification element in instead of depending on the one thing. All right, so this is the Love and Money Show. If you like the show, please hit the like button. It helps the channel. Please hit subscribe if you're not a subscriber and notification bell next to it so that you won't miss the episode. Also, leave a comment at the bottom and let me know your thoughts. Thank you for watching. Have a good rest of your night. Bye for now.